Hi everybody, it's Matt from Vector Trade. What a lot of people are asking is, where do I start if I'm a new trader, or if I've been doing it a while and obviously there's a lot of information out there. What information do I need? How do I approach looking at a chart? So I'm just going to show you S&P 500 on TradingView. I do use MT4. So MetaTrader 4, which is great. But I'm just going to show you this just so you can see how I would operate and what I would look for. This is tradingview.com. On the right hand side here, you can add these in, take them away, whatever you want to trade. So I've just literally got it on a 4 hours. I generally start with weekly, daily, but 4 hours fine if you're intraday scalping, because just on this chart we're going back to December, beginning of December. So what I've got on here, indicators wise, I've got what, moving average 200. If you sign up, it lets you put more than 3 indicators on. Hands up, I don't sign up. I use a free TradingView. So the ones that work best for me, and again, I am teaching you how I trade. So people use other indicators, that's fine. But for me, this is what I use. Let's just load this up. Sorry, the computer seems a bit slow today. So I've got the moving average 200, which is here. If you look at that, you can have settings. You can change it to moving average 9. You can do what you want. But for me, I like the 200 when it's clear like this, just as a really big overview. We've got awesome oscillator, which is actually really good in short. Okay, there's a lot more to it in strategies, but in short, if it's above the line, you go long. If it's below the line, you go short. But obviously, you're also looking at variance and divergence. So, for example, here you can see, price coming down. This made higher low, and then price goes up. So we'll talk about that in more detail. We've also got RSI. Now, RSI, what I use, is standard. They say RSI 14. To be honest, I hardly ever use that unless it's a strategy with RSI 5. And then I trade the crossover. So it's RSI level 5. And on here, the automatic, what they refer to and is overbought and oversold, is level 70 and 30. In reality, I'm just going to put, if I put this line here is 30, it always goes below 30, it always goes above 70. So I've changed mine. And you can do that once you've got it here. You click on that button there, settings. Your computer is going to be faster than mine. I've got too many programs open. If you click on there, if it decides it wants to open in a minute, you would just change it. I think I've put mine to 15. I can just check that there. No, it might be less, 10 actually, 10 and 90. Because that really makes a signal stand out. So forget 70 and 30. I changed mine to 10 and 90. And then really, if we look at the 4-hour chart, forget everything else. When it goes below the green, it's not really, I don't like the term oversold because it can keep dropping, but it's a potential buy. So when you've got the divergence on the buy, it just highlights. So at each time it's gone below there, it was here coupled with the divergence, which I'll show. So divergence, again, what I mean is they don't tally up. So price become lower, but RSI was going higher. So at this point, you then make a buy. So if you bought there, you're talking 2,900 at 3,300, 400 pips on S&P is huge. It just happens over and over again. It happens down here. So you have price coming down. Again, you've got double whammy, perfect buy signal in March lows because you had divergence on the OSMA. You've got divergence on RSI. And again, just say to divergence, what is it? Price is going lower, but the indicators are going higher. Big buy signal, and it works in reverse. So I would approach this chart and have a look at that. That's what I start off with. It's nice and clear. All these indicators can just, put too many moving averages in, Bollinger Bands, too much. It can just really stand out. So again, I'll zoom out and I say, right, well, let's put some levels of resistance in. So top one, like right at the top, all-time high before it dropped. That's fairly key level. Just using my eye now, I say, right, well, this was a previous high. Okay, down there. Let's move this. Get out of the way, you. I want to find where there's multiple levels of resistance. That's probably another region. Okay, and you can go all the way down, but let's keep it simple. We just want to look at roughly where the price is at the moment. Okay, you could have a look at as it came up, where were levels of support or resistance. Yeah, probably there, maybe here. You had like 1, 2, 3, came back, test, bang. So again, these are the regions. So it's really clear still. This chart is really clear. Couple of observations. Prices obviously above moving average. It's making higher highs and higher lows, higher highs, higher lows, high, high, low, high. You know, so it's a clear uptrend. There's a lesson about trend lines. If you're unsure about where the market's going, again, using trend lines, you want to have a look. Just going to zoom in so you can scroll on the mouse. I want to kind of dissect this level. Okay. I want the line of best fit. I'm probably thinking that's okay. You'll do a better job than me. But you know, roughly, if I click on that line now, okay. If I right click on it, actually, I think on here, yeah, I can clone it. If I clone that, I can start moving this. I really need to invest in a better computer. I don't know why I don't. Okay, that's a good fit-ish. So it was support, crash through, resistance. I can do it again, and what we're doing here is we're just giving us a nice, clear trend. Let me just right-click on that, clone that. But what it's also doing, not just trend, it's actually giving us a channel. So again, trading is all about odds. Okay, if I haven't told you that before, then I'm telling you now. I should have told you. It's all about odds. We're using these lines now to find multiple points of touch. So when you first look at the chart, you're looking at 50-50. Don't like those odds. We want 85 to 90% trade. So where we're coming from now, we start lining up the areas of resistance at the top here. Then we've got the diagonal channel resistance. We might have a moving average up here. So again, this is all increasing our odds of where we take profit and where we obviously look to enter, exit, etc. Have a look at the indicators. One of the things I noticed about the indicators is we really want price. As price moves up, you want the indicators to be getting stronger. A couple of things I'd look at, you know, is we've got divergence there. You know, this was a previous peak. You know, bizarrely, you could come all the way down. You know, so this move is, but you can't just rely on divergence. And so you'll hear people say, "Oh, it's oversold." There's divergence. That is not a signal. So this clearly shows here. Okay, that was the peak for Awesome Oscillator. It's only got weaker since then. So you don't want to be shorting from down here. Ridiculous. So you have to wait for confirmation. So we've got probability trades, we've got resistance, we've got the channel, we have moving averages, and we've got Awesome Oscillator. Now, what you'll see again, so despite it being divergence, which is a warning sign, it's still positive. So on the 4-hour chart, S&P is still positive. What we want to look at now is zoom in, and I'll start throwing some Fibonacci levels in. So to do this, I want to measure two things really, and then you go into more detail. But the first one, I want to measure the top. Okay, and we want 100 on the top. TradingView and MT4 do it opposite way around, so I always get confused when I first go. But really want 100. So where did the move first drop? So this first Fibonacci, we're going to measure the retracement. So we've got a nice V-shaped recovery. Okay, so we're actually measuring it now. This is going right the way up. Okay, it's basically at that level of previous level of resistance. It's getting close to the previous peak. The second thing we want to do is measure. We have a wave 1, wave 2. This is probably a sub 3, sub 4, 3, 4, and we're probably a 1, 2, 3, 4. And we're probably in the fifth of the fifth. The final stages, I would argue, or I believe we're very close to that. Now, what I want to do is measure the extension of this first, what we call a pullback or the swing. So if I literally put 0, let me zoom in so I can make that clearer for you. Okay, bang, bang. Okay. So add that in, and now you can see, hopefully you can see, it's highlighted Again, very, very close to one of the last levels of resistance. And we've got that extension. So when you came in at this level, okay, at the moment, the market was still going lower. As soon as it went past these two peaks, it's bingo. We've broken above that high. So what we want to do now, we want to get in long here, and we want the stop loss to be below that one, because if it breaks up and then lower, it invalidates the whole move. So that was the entry. And that's where the stop loss would be. And then you literally don't do anything. The hardest thing as a trader is to let a profit run. So if you try and trade like a robot, you never need to look at that. You know, these probably big boys got in April, we're now August. They didn't need to do anything apart from adding extra positions. Didn't need to do anything. So our chart is fairly complete. So when I look at that now, I say, right, on a daily or hourly form, we've got a really good looking chart. I can see the previous big levels of resistance, you know, all-time high. Highlight it, you know, to help you. Which tool is it? Text, you know, we can write up here. All-time high, all-time high. Okay. Okay, we need to be aware of that. It's a major level in the market, and we haven't really had a decent pullback since then. So the next thing I do is say, you know, there's no real, apart from this fib now and that, we're starting to think, our Elliott wave count. So let me just label that. So in here in the tools, it's one of these. This tool, we've got an Elliott wave, and you really need to get to grips with Elliott wave because it's effectively mapping human behavior, human psychology. I think this was a one. This wave 3, which is always the strongest, most powerful, it subdivides. So it comes up a 1, 2, and a 3 and a 4. We're putting this as a 3 in our count. We're putting that as a 4. And we're putting this as a 5. The reason this is important because you know, if you were mid here, you know you're not going to short it. I mean, you're nowhere near the right fib, you're nowhere near right resistance levels, and that will stop you getting burned. So again, you're adding these in, so you can start then using our Elliott wave calculation. We can start measuring various Fibonacci's out. So if this is wave 3 and 4 complete there, we've got a 1, 2, and a 3 and a 4. So we need to measure wave 5, and there's obviously rules for this, which I think I've done a video. If not, I will be doing one. But again, we can see where's the extension there. We can use this Fibonacci and say, right, you know, this could potentially go much higher. What we normally see is we go 1, 2, and a 3 is a 1, 6, so it goes there. Generally, what we'll then look to do is we'll put the leave the 0 at the 2. We'll put the 100 at the 3. Then we have a 4, and then the 5th. It can go between 1.13 and 1.272. So what you can do is, again, you can mark those levels out using that tool there. Just you can mark it out. Now forget all the other lines. So you're saying the Fibonacci should be reaching this. When we then got the also in a channel, this isn't the perfect channel, but wave 5 can go through the generally to the middle of that channel before failing. So when we start combining this 423, which is a major, that should signal the end or profit taking of the move. We then got the 1.13, which matches up very, very close. We then got the resistance. And also, I'd say we're quite away from the moving average 200. So all of this starts making you think, well, hang on a minute. I don't want to be entering a long up here. The trend is long, but you would want some kind of pullback because we've got wave 5 would subdivide into 5 waves. That's how Elliott wave works. So you've got a 1, 2, a 3, 4, and we're very close to 5. So your risk reward is not to go long on a swing trade up here. You really want a decent pullback. If I was going to measure the pullback, let's just say that is the top or very close. We'll put the 0, and the 100 down at the bottom. So really, okay, we would probably expect this to come. It's crazy. I don't know what the excuse would be in the market, in the news, but something would happen. We you know, you're expecting this really to come, even if it's just continuation up, at least to the 50%. So again, what can we do? We can start predicting or saying, right, well, where could we go? Where was major support before? This was huge support, and this was huge resistance. You know, many times it was support here, resistance, support. So like this kind of level, you can see you could add a couple of lines in there. Okay, so what we're doing is we're saying, well, look, if market drops, okay, we want to see where it could be. Now, confirmation of a trade, you want to see the first move, right? And it's hard to time the top because the market can just keep going, rip your face off. But you want to then wait for it to come back up. So it comes down, comes back up, 61 to 76% retrace, and then you get in. So you don't worry about catching the first move because more people lose money trying to catch the first move. You're safer to wait. The first drop up, bang. And then again, doing exactly what we've done here, but in reverse. So you're forward planning. A lot of traders and analysts will tell you what's just happened, which is great. I mean, anyone can do that. But what you want to start doing is training your mind to say, right, what's going to happen next? There's some timing tools that we can use with RSI, which I can show you. But again, there's a lot of reasons to say that the market is due for a pullback. August is typically a weak month. Go back to, I think it might have been August 16 on the DAX, and market collapsed. The excuse back then was Greece, then it was to do with China bonds. There's always an excuse. We're in August now. You've heard sell in May and go away. That's not necessarily true. But what it does do is, if you think about the market, you've got an potential election coming up in November. So Trump is playing the market. He's going to want the market up high. Going into it, the market needs to cool down before then. So what we want to see ideally is a pullback, and then it starts rallying up into November. So we've got 3 months for that to happen. So it would not surprise me if you get a quick sharp drop, take out loads of the longs, and then it could well just continue going up, up, up. So the point of this video is to show you how I approach a chart. There was nothing on this video when we first started, but hopefully using some of these tools, which is free, you don't need to sign up to TradingView, will give you a real good insight into just how I approach creating a chart. And again, what you've got to think about is the percentage. So if you don't put any tools on, you're 50-50. You could go up, could go down. Okay, it can go sideways, but you're not really going to lose any money or make any. So really, as far as the trade is concerned, it can only go up or down. And you want to get your odds increased. So using the combination of these tools, which are all free, they're all on there. You start building a picture and you start saying, right, well, actually, I do want to long this market, or do want to invest in the stock market, as in not just spread betting, but shares, and use this and just say, right, where do I want to buy? Where will the big boys buy? Because they will not be buying from when they bought at 21.84 to 33.38. They're not going to be buying at the top. They're going to want to cash that profit. All this money they've made is virtual until they sell it to people. So they're going to be wanting to distribute that and sell that to people. And then they repeat the cycle. So you'll buy at the top. They'll sell you all their positions. Market drops. You panic. You sell. You offload it cheap. And they then buy it back up and off it goes. So that's the games. That's what they play. Hopefully that video helps. But obviously just drop me a message if you want any further clarification. Cheers.